Hello and welcome to the Investor Master Series. My name is James Boyd. We welcome you on this Tuesday morning. Beautiful, almost May here. Hopefully that nice weather is coming your way. We also got Barbara Armstrong in the chat. We welcome her. And we also got Sharon, Gary from the gym, who's getting ripped and huge. So good job there. Alfred, Frank, Grace, Bill, or Double B, Life in the Fast Lane, Will, and many others. Welcome to all. Now this class on Investor Master Series really is about stock investing, technical analysis, fundamentals, option strategies. Really, we're trying to have a class at an intermediate, advanced level where we could try to bring it together. We'll also include portfolio management with that as well. So, a quick heads up there. So, just understand that if you say, well, James, I'm more of a beginner, can I still come to this? Absolutely. Okay. I think it's sometimes better just to go to the harder classes and then fill in the holes as you go. All right. Now, just real quick as we get started, I want to give a quick reminder. Barbara posted in chat her handle and my handle of X. We do post educational content there, so be aware of that. And also we post announcements as well. Now, just real quick as we get started, remember that options carry high level risk, not suitable for all investors. And it is absolutely okay that if you said, okay, I understand about options, I might consider options, but I'm not going to trade every strategy. Join the rest of us, okay? Strategies, all the strategies are not meant to, you might consider all of them. It's like a buffet. If you choose to do options, you might choose the ones that you might like for yourself if you choose options, and that's okay, okay? Remember that also the information is provided for general informational purposes only, and also remember we're going to be using the Paper Money software application. There is a web-based version. There's a mobile app, so be aware of that. But really in our classes, we use the Paper Money software application. Now also remember that investing involves risk, including loss of principal, can also include unrealized gains. Okay, that's always the one that hurts. Now also remember when we talk about short options, which we did yesterday, okay, short options, that could be like a sold call or selling the put, etc., or short put. These are American style options we'll talk about, and those can be assigned at any time up to expiration, regardless of the in-the-money amount. Now, we kind of have an interesting situation going on right here. We want to kind of talk about market conditions. I want to kind of talk about some of those fear areas. And are some of those fear areas, like gold and Swiss franc and the yen, are people still hiding in those areas? Or are they not buying them as much? Now, if you know the answer to that question, type it in now. Speak now, forever hold your peace. And so I want to kind of talk about some of the equity markets. Well, of course, look at the SPX, NASDAQ, etc. And then we're going to also talk about the two paper money portfolios we have. I'm going to ask openly, are there any positions you would like to look at? And then I'd like to look at some new examples that will be stock and option based. So first off, let's go ahead here and just take a good look at the SPX, okay? Now, if you look at the SPX, we've been very consistent on having these lines. That 61.8 was really the 54.18. Talked about that for about 2 weeks. A little bit higher than that is the 54.94-ish area, or 5,500. And it was on what? Friday? We actually got above that. Now, there was a lot of people that and I'm not talking about you, okay, because you read the charts, okay? You're not trading how you feel. But I sensed there was a few people that didn't like that move on Friday, okay? We closed above the 5,500. Yesterday was a red candle, kind of more doji-like, right? The open and close pretty much at the same price level. Intraday, we went down, sold down a little bit, down to the rising moving average, and then closed back up. Now, by the end of the day, it didn't go anywhere. But by the end of the day, it didn't break support either. Now, some days you just kind of get these neutral type candles. That's a part of the trend. Now, here we are about 90 minutes into the marketplace. So far, that's a key term. We got a bullish engulfing candle. This is not close above the high of the low day yet because we would need to get above yesterday's high. But if we got above yesterday's high, close there. 55.54 is the number. That would be a brand new trade above the high of the low day and or close above the high of the low day, okay? Now, again, I'm just going to go to shading. My feelings, doesn't really matter, okay? If we look at the shading, we still have that green shading, and when we did have a little red, just a little bit right there, it was only down for a day. and then bulls pushed it right back up. So that shading is still there, which is signifying currently there is some short-term momentum in the marketplace. Now, if we go back on this and kind of say, where's that major level? Where did the wheels, where did the market really break down? It's right around 55.78. Now, what I think is kind of interesting is when we kind of talked about some of the tariffs that we've been going through economically, etc. I think it's interesting to note, what was the Liberation Day? What was that, April 2nd? Well, if you go back and really take a look at it, this is what, that Liberation Day, check me if I'm wrong, I think it was April 2nd. And you look at where we are right now, really what happened, it looks, and I'm talking about the price graph, it almost bounced all the way back up to where it was. And we haven't had, to my knowledge, a single deal announced as far as a new relationship or new terms of the relationship. Now, this is classic technicals, where investors do not wait typically 2 earnings to make a decision to buy or sell. It's prior to. They kind of analyze, do we think there's odds, good odds that it could be positive? If so, they might buy. If they think the odds are not great, they tend to sell. And really, the news announcement is just the confirmation of what they thought. It's very important you understand that. They don't tend to wait until the news announcement. They're investing. Now, when we take a look at just real quick, the NDX, what you're going to notice is, now, does anybody know, yeah, I won't say that. Now, I'm going to go back to just real quick. I'm not sure if it was just real quick, April 2nd. Check me on that, okay? If you go back to the NASDAQ, the comment I made yesterday is really, if you look at that, 19,268, same type of idea on the NASDAQ, fell down to the rising upward trending 10-period moving average, and then so far bullish engulfing. Okay, now when we take a look at this, if we're technicians, okay, what do we see on the chart? Rising moving averages, which is the foundational understanding of technical analysis. Second part of this is it's green, okay? And it's saying it's green at that point in time, meaning there's current momentum. Now, what you're going to notice is if you ask most people, how do they feel? How they feel is not technical analysis, okay? It's not, okay? And you could actually have thoughts in your mind that are different than what's happening on the chart. Just because that investor doesn't want to get in, etc., that does not mean that that really represents what the market is doing. Okay, now you got to also remember when you take a look at kind of this next upside, if we're talking about the 78%, 19,492, up above that 19,818. Now we want to also be aware, this is when we're looking at the daily chart. So why are some people pessimistic? Well, we go back to that weekly chart for just a moment. And if you look at the weekly chart, you're going to see that this is why some people are pessimistic, is that we've fallen down. Now, if you don't mind, well, I'm not going to because I want to keep those lines there. The one thing we do have to say, even if we said, look, we're bearish, intermediate, long term, we do see the shorter term moving average, the 10-week moving average, it has gone green. The second thing we've actually seen, if we can hold here, there's a cross. So there is some type of healing on an intermediate, longer term basis, but it makes sense that some people kind of say, hey, I'm more bearish. You just got to understand is when would you change your mind? Okay. Now let's go to the VIX just real quick. When we take a quick look at the VIX, pull up this chart, and what you're going to now notice is not a, well, this was a lower low on the daily chart, 24.85. I mentioned yesterday in the margin account, the paper money account is still short volatility. I want to state what the target is, okay? The target is that the VIX, and I'm going to state this, I'm going to put a target on this trade after the class, that if we were to go down to about, let's say, what, 2150 in that paper money account, and maybe it goes till Friday, I'm not sure. If the VIX goes down to 2148, it's going to profit take on that volatility position that we did about 2 weeks ago. So if we went down to that support area, about 2150, some technicians would be looking to maybe exit the volatility because what we said is, given some of the things we're seeing in the macro economics standpoint, back and forth between countries, it's probably likely that the volatility might stay a little bit more elevated for longer, okay? So I think we kind of have to have an expectation of, do we really think the VIX is going to go down to 15? Okay. Maybe 20 is the new 15. So that's why we're kind of talking about where's the target on the volatility play. Volatility doesn't go down forever, doesn't go up forever. The target on the volatility example is going to be right about 2150-ish. Now, what I want to do is take a quick look at sectors for just a moment. Now, when we look at gold, what is gold doing? Okay. If we look at the Japanese yen, what is it doing? If we look at the Swiss franc, what is it doing? We already know what the VIX is doing. If you look at gold, Swiss franc, and yen, which is those kind of fear outlets when people are scared, well, or just want to be more defensive, those areas are not going up like they have been before. That kind of might tell us something, okay? Why are they not going to those areas? Do they actually think we're closer to getting some progress than not progress? And some of us might be thinking, well, we might be closer to getting some progress. I am not saying that everything is going to be resolved. Not going to say that. But the biggest actually thing is we don't see the movement in gold, yen, or Swiss franc kind of taking a pause right now, okay? Now, if we do, for example, now what that might mean is when we take a look at some of these areas and sectors like technology, which tend to lead, those have actually been going up a little bit. Now, remember, they're at major levels here, okay? Now, when you look at most charts are really kind of showing something like this, okay? They're kind of showing in the shorter term like an ascending triangle. Do you notice when you look at many charts, a lot of them look just like this? Do you also notice that a lot of charts, when you pull them up, they look like symmetrical triangles? You notice that? They're just mimicking what the market is doing. Now, why do we see a lot of these prices going in between the resistance and support? Why are they not breaking out? What is it that they're waiting for? Now, I know some of you are saying, that was exactly my question. Well, sometimes they're waiting kind of to see if they can get any news, to kind of get any direction of where they think it might go. Now, again, I think it's interesting. Do all sectors break out on the same day? Not always. Some tend to lead. Technology getting a little lead here, okay? Which many investors might say, geez, that's not that bad. That might be a good sign. Now, if you take a look at, let's say, the discretionaries, okay, those have actually gone up. Now, remember, they're in a downtrend, but they're trying to reverse out of this sell-off, and so far, they're doing a decent job. Now, remember what I said is when you get these sell-offs, okay, and remember I talked about that symmetrical triangle? On the right-hand side, there's your symmetrical triangles. Pull up a lot of different stocks. They look just like that. You have to remember when you get to bottoms, the movement off bottoms could be like potentially year-like returns in a short period of time. They could also be year-like losses in a short period of time. That's why some people like to trade bottoms, because if they could get it right, the reward could be quite handsome. Now, it also kind of depends upon how does the investor want to try to trade that, if they do. Now, we have tech, discretionary. Am I missing anything? Any other sector that we need to include? I'm thinking of one. I just want to see if you can get it, okay? Well, the one we have not mentioned, but I think we need to include, is going to be the $ IXC, okay? And I'm looking at the index, okay? You might look at a different product, but we're getting to the same thing. But if you look at, let's say, the communication sector, and this is where you want to say, well, what stocks are in the communication space, okay? Now, if we took a look at, let's say, this, that is also the breakout. It's also kind of showing us right at that area. And this kind of goes back to a lot of investors, okay? They might say, now my brother was just in France yesterday, okay? And we were talking about resistance, okay? He was only over there for a day, so we couldn't keep talking about resistance, okay? Now, if we take a look at this, okay? Technicians are going to say, I think we're at a resistance. I think this is where it's going to be a place of selling. Wow, what an insightful comment. Here's the deal. I think where the comment becomes a little bit more interesting is, how come it's not falling down at resistance if we really think that's resistance? Why? The longer we stay up at resistance, the lesser fear there is that this is really resistance. And if there are sellers, they're not selling in a huge magnitude. And if they are selling in a huge magnitude, someone's countering those sells with buys And that's why the price is pushing back to the upside. I don't even see a red candle so far. If sellers are waiting to sell, where are they? Calling all sellers. Where are they? Now, did the sellers give up? Did the bears just go home? Well, bears tend to be bears. They tend to like kind of raid things, eat a whole bunch, and then just take a little nap. So they tend to raid prices at key areas where they think it could really go down and volatility could expand. And right now, so far, we kind of don't see any bearish attack. Okay. Now, if I were to ask you, and you're a technician and you're not trading how you feel, but do you think this is going to go up or down? You think it's going to go up or down? Okay. Some of you are like, well, I'll tell you what I feel. Oh man, I love, I tell you what, we can get it really emotional, can't we? Now, overall, if we kind of say, look, let's kind of go back a little bit and kind of say, look, on the communication, which by the way, I want to know the stocks that are in the communication space. Give them to me, okay? I'm demanding right now. I know it. I can feel what I'm demanding, but I need them. What are those stocks in the communications area? Now, if we can get above that 495, the path of least resistance might be to the 518 level. So why do bears, now remember what I said before, if you break out of resistance, you, for example, could get the shorts covering short, and I've hit that, but you could also get longs who add to the positions or new buyers that are, for example, gonna buy. Now, people will talk about this stuff like, there's so much money on the sideline, blah, blah, blah. Look, in real life, we just look at the people that actually are in the marketplace, okay? I know it's always fun to talk about the people on the sideline and people on the sideline. They've been talking about that stuff for 25 years, okay? And they're still on the sideline. Now, the one thing I think that is not being really discussed is when you break out of the symmetrical triangle, you do have a pretty strong pull. Now, we know that when you talk about bull flags, you can get something that runs up in price and then pulls back, okay? But what happens if we run up in the price and then it kind of goes sideways? Would you say that number one is holding more momentum, or would you say that number two is holding more momentum? Thoughts? Which one's holding more momentum? How would you know? Well, we would submit that, if the price, in number one, if the price actually has to fall down before buyers come in, it had to drop more price or lose momentum to get buyers to step in to buy. In example number two, the price did not have to drop before buyers are willing to come in, and they bought at the highs. Why would you buy at the highs? Probably only one or two good answers. Someone thinks it's going to go higher who's not trading on their feelings, okay? Who's maybe trading on reward to risk, and they're saying, look, I might set a stop, the investor says, at 490 and try to target 518. So it doesn't mean that they have to have wide stops to test this. And that's a very key point, okay? The Tech One Trades, JB, do you look at weekly indexes for momentum? We just did that, okay? We just did that, okay? The second part of that, and I looked at that probably about 5 minutes ago. The other thing is when you go to, let's say, the Market Watch, you pull this up and you bring up the indexes. The reason why we have the trend weekly, okay, the trend weekly is to look at what you're asking for. Now, the other part of this is if you go back to when we look at the paper money account now, okay? So why is a paper money account trading so many defined risk trades? Easy answer. Because the intermediate and longer term trends have been down. Now, let's take a look at this, okay? So what I mean by that, let me kind of show you what I mean. If we pulled up, let's say, the SPX, bring this back. If I pulled up the SPX, okay, and there it is right here, here's the SPX, there. And if we look at the trend and say, what's the trend on the weekly chart? It's a trend 1, okay? Now, if you look on the daily chart, it's showing 3. That's what we saw, a shorter term upward trend in a downtrend, intermediate longer term. Same thing if you look at the NASDAQ. 3. The difference in what we're seeing in the NASDAQ is what? It's showing a trend 2, which is what some technicians would call a trend reversal, okay? Now, if we said, well, where is the Dow Jones? Dow Jones is in trend 2. It's lagged a little bit, hasn't gone up as much as, let's say, the NASDAQ and the S&P, and it is also showing really trend weekly. Now, the moral of the story is you can still trade bullish, but you got to be careful. Now, be careful on which ones are bullish, okay? Just because the weekly charts are showing down doesn't mean that all stocks are down. You can't use a fat paintbrush and paint everything the same color, especially if it's hitting brand new highs on the stock price, okay? Now, the lower that the indexes go, it's true that a greater percentage of stocks will get drugged down by it. That's true, okay? But if we're seeing this kind of more down and neutralish, there could be some stocks that are bucking the trend of the index, okay? So it's important not to be, we're going to use the word lazy, just to say, index is showing trend 1, everything is down. Strong word like that, everything, is probably too strong, and we should probably verify, okay? Now, what I want to do is let's go ahead and take a look at any questions. Now, the comment from Probability Trader is, JB is forgetting to look at the volume decreasing since the last 4 days. Answer your question, I don't look at volume, okay? I don't look at volume. So, yeah. You might wonder why. Well, because a lot of the things we actually look at are really stocks that trade a lot of volume anyway, in the millions, okay? So I don't look at volume. Just being open with you. If we see, let's say, volume that's apparent, we bring it up, but on a day-over-day basis, I don't look at volume, okay? That's just me. And that doesn't mean that necessarily everyone has to do that. Now, what I want to do is I want to kind of bring up some examples, and I want to kind of just ask you a quick question. So I want to show you some positions that are in the portfolio. Here we are in this account, the IRA account. And what you're going to notice is I just want to look at down this delta column. The delta column is just going to show us, is a positive delta for a bullish trade? Is it negative delta for a bearish trade? There's one bearish trade, two bearish trades, okay? And if I go down, I see two bearish trades in those positions. So let's just say we had 15 positions total. 2 of them are bearish. Now, if I said 2 of them are bearish, we think, well, that's a pretty high percentage, until you realize it's only 8 delta and 5 delta negative. That's 13 delta out of about 500-ish delta. So our bearish positions are not very bearish. Now, when we actually look at the margin account, what you're now going to notice is, if you take a look at this one, you're going to see that how many bearish positions do we have? We have a short position in Lowe's, short, okay? And you're going to see outside that, we don't really have any other, quote, bearish positions. One of those looks like it's bearish, but it's actually bullish, okay? The market. Now, what I'm going to do is if I pull this back up, let's kind of talk about some examples that we see in the marketplace, okay? Now, if we take a look at this, I'm going to pull up just real quick a couple stocks, and I want to go back to, let's kind of focus on this communications for just a second, okay? Now, by the way, if someone said, James, I haven't been doing this a long time, how would I know that about certain stocks? Easiest way to see this is if we go to MarketWatch, if you go to Visualize, the easiest way to find that is we're just going to pull up, let's say, I like to start with the S&P 100, just because it's a smaller list. And if I pull up S&P 100, okay, I'm on MarketWatch, Visualize, I'm going to click on that. Now, if I look at this, this is just going to expand the sectors in the S&P 100. Now, if I click on Communication Services, what it's now going to show us is the stocks that are there, okay? Now, the difference in the squares, the rectangles, is the market cap, okay? Now, stocks like Meta, AT&T, Verizon, and so on, Charter, T-Mobile, Netflix, and etc. Now, obviously, if we went down to the S&P 500, we're going to get the same communication services, but it's just going to probably give us a couple more stocks. One of the ones that's been the dark horses on the outside is Take-Two Interactive, which we mentioned, I think, probably last Thursday. TTWO has been one that's been pretty strong. Now, this is the exact point of what I said. When we look at the market on the intermediate long term, we think everything is down. That's not true. Okay, now what I'm going to do, let's kind of start with the stock position for just a moment. Okay, a lot of you might say, James, I don't trade options, but I do stocks. Okay, now if we take a look at this on a daily chart, okay, we actually see that there's the daily chart. And if we actually look at this on a 3-year weekly chart, that's what it looks like. So you could look at the chart and probably say, wow, this has been one that's shown relative strength. We don't know what the future trend is going to be. We're just looking at what the past trend has been up until now. Now, the reason why we look at trends is sometimes the trends could be something that might continue to the upside, or if the trend has been down, it might continue to the downside. Lower lows, and they might not be able to reverse out of that downtrend, or maybe there's just a lot of buyers pushing the price up. Now, what I'm going to do, let's say on this 1-year daily chart of TTO for just a moment, if we said, where do we see really the old resistance? The old resistance is probably right about 226. If we look at this chart, the area that we actually saw this kind of bull flag start, we pulled back to here, and then we rallied up to there. That's if we take it to the top wicks. If we're talking about the bodies of the candles, the body there up to the body there, and what you're now going to notice is, if we look at this, some might say, James, here is our pull. Now, what do some investors do with this information? Well, if they said, James, look, I want to try to buy on a dip. I want to try to, for example, maybe do like a buy limit order, okay? Now, I want you to kind of think about this. If you're dating, I don't think anyone ever says, I like to buy on a dip. I like to find someone who's pulling back, and I like to kind of create a friendship or relationship with that person. And then that person, since I joined with them, would make a higher high because I joined with them. That's what you're thinking. Now, it's kind of funny how we sometimes think. It's not as logical as it seems sometimes. Now, if we take a look at this, I'm going to right click right near this first short-term support level. Now, a lot of people, when they look at this, they might say, oh, it's gone up too much, gone up too much, gone up too much. But what I'm going to do is I'm going to right click on this, and what I'm going to do is go buy custom with OCO bracket. Now, the whole point of this is we're trying to really buy in just a short little pullback, okay? And what I'm going to do is I'm going to click on the pool balls, go to percent, go to dollar amount. The capital size that we've been really working with is right about that number right there, okay? And if I click on that little icon right there, it's going to be about 27 shares. I tell you, it is funny, okay? 27 shares. So it's going to be at 223. Limit, is it day order or is it GTC? Well, this would be GTC, good till cancel. Now, if you said, well, James, I want to do GTC, but I want to go over here to the right-hand side, and I want to say cancel this at a specific time, okay? If I click on that gear right there, what it's now going to do is we can specify, look, cancel this. If we cannot get a buy order, we're going to say, look, cancel it at the end of the week, which will be May 2nd, and I'm just going to put this at 1400 hours, which is my time, Mountain Standard Time. If we cannot get filled, cancel it, okay? So we're saying, look, allowed to buy 27 shares if the price is this price or less, but on Friday at market close, okay, 4 p.m. Eastern, shut the position, shut the order down. That's a simple way to do it. Now, the one thing that this does not do is this does not say, well, wonder if it just keeps going to the upside, which it could. Now, what I'm going to do is I'm going to look at the top side and kind of say, where might this try to go to, okay? Now, what I'm going to do is I'm going to flip this around, okay? The purpose of flipping it around is where we're going to really draw it from where the top was and where this move started, and we're going to use the 161 as the extension target. That extension target, we're going to put right at 240 or so. So 240, okay? You might put 240.91 or so. And then what I'm going to do is I'm going to use that first Fibonacci level, 222.48, and I'm going to set the stop right underneath that level. Now, if we did that, let's say 222, 48 times 0.98, it's going to give us, so that's the first Fibonacci level, less 2%, 218.03. And I'm going to type that price in right there, okay? 218.03. Now, if we did that trade, what you're now going to see is, think about the stop, okay? So first off, to have the stop valid, the entry has to be filled. It's allowed to buy at that price or less. Second, if it is filled, the target is valid, the stop is actually valid, and then what we're going to go ahead and do is send the order. There's not a commission to buy the shares of the stock. This is a stock trade. It doesn't say anything about expiration, no strikes, straight up stock trade, okay? So that's our first example here. Just kind of take a moment here. And what I also want to do is I also want to go back and just kind of take a look at some other positions as well in that area. Now, what I want to do is I want to pull up, so this was a new example, but I also want to go back to, let's say, a current example in the paper money account. Speaking of gold for just a moment, okay? I need some help here in terms of managing the position. Now, can anyone tell me what this position is that has 100 shares of stock, sold the call? Now, let's stop for just a second. We have shares of stock, sold the call, and we agreed to sell those shares for 110. And we agreed to sell those shares from the time that we sold the call and got filled until expiration. So first thing is, could an investor take these shares irregardless if the stock was above that strike price? The answer is yes. Could an investor out there be more enticed potentially to buy those shares from this paper money portfolio account if it was above 110? It might entice them, okay? Now, what you're going to notice is, where's the current price now? Well, the stock price right now is at 116.33. It's above the 110. So if the stock goes above that short call, the call becomes more valuable. Why? Well, because the call has more intrinsic value. Now, the put, that was really that was the defined risk. If the stock goes further and further up and away from the long put strike, that put deflates in value because there's a lesser chance to close below that strike price. We're at 116.28. This is at 90. Now, why is it still worth 20 cents? Because there's some time left of 17 days and there's still a chance. It's just not a very big chance. That's why it's not a very big premium. All right. Now, let's kind of talk about this. Need some help. Now, if we looked at this position and said, okay, what did we, now let me go back to this. Let's go to new layout. Let's go to AM for just a moment. Let's look at the position. Can anyone tell me what the maximum gain on this position was? What was the maximum gain? So let's do a little math in our head here, okay? We got 102.92, and what you're now going to notice is, that's where we bought the stock, okay? And we'll walk through nice and slow. And did we get a credit or a debit when we did the caller? That's what this position is. It's a caller. You got shares, you sold the call, and you bought the put. Did we get a credit or a debit? Now I'm going to write this down, 102.92, and we can get up to 110. Now that's conceptually, that's not very hard to understand. You bought something at 102.92, you agreed to sell it at 110. Not a very hard stretch to get there. Now we just kind of need to understand, well, did we get a credit or a debit? Well, we got a credit. We received 310 and paid 192. So if I do that, just double check the number. The credit was $1.18 above that. Okay? So what you're now going to notice is we could make up to, what was the maximum gain? Or what could we make up to? 111.18. That's what we can make up to. So if we bought those shares at 102.92, we could make up to 111.18. Someone might be thinking, where'd you get the 111.18? Well, the 110 to the strike. This is the credit we received for selling the 110, plus the debit paid for the 90. Okay? Now, so if we can make up to 111.18 and we bought the shares at 102.92, the most we can make is $8.26. Or in other words, $826 because we have 100 shares. Now, the question now becomes, how much are we up on this position? Answer. Well, if we just look at the top line, we're up $693, $696, $697. So I'm going to kind of write right here. We're up $697 of a maximum gain, $826. Can anyone tell me the percentage of maximum gain? Well, 696 divided into 826. We're sitting at 84%, 84.38257, just to be a nerd about it. Okay? Now, when you're right, you want that, give me all of those decimals. So if someone was at 84% of the maximum gain, what would the investor maybe consider? Well, they might say, James, even though I have 17 days left, I'm not going to try to get the last 15%. When we say how much is that, it's going to be about another $130. Some might say, James, if I wait, I could try to get the $130 or grab the 697 and say, thank you very much. Now, you got to remember, to get the $130, you could risk the 697 that you're currently up and lose money. And many investors say, James, that, speaking of reward to risk, that doesn't sound like a great setup. You probably wouldn't get in a trade with numbers like that. So the question now becomes, why would the investor stay in a position like that? Well, that's the point. That's why we brought it up. Now, we're going to go ahead. So how do you do this? The investor could just say, look, I'm going to right-click on those first, okay, and close down the collar. Now, a lot of people, I used to look at this and say, oh, no, I'm a loser. That's what I used to think, is that all these positions lost. Well, if those positions lose, which are bearish, the gains are where? The gains are in the shares, okay? Now, so it's offsetting the losses in the bearish option positions. We're going to try to buy those back, confirm send the order. Now, once we now say, okay, it's filled, and we do not have the short call or the put, now we just own the shares. How do you close the shares? Right-click on that line, create closing order, and sell. So when you're managing the position, you're really kind of going back to the basics of what's your max gain, what's your max loss, and what percent of the gain or the loss do you have now? Confirm send the order. Okay. Now, now Silas actually says, get your cold hands on that profit. It's up to the investor to really be monitoring their position. And I just kind of want to say, like, so I tend to be, so I work at home, okay? So a lot of times I can be at a computer if I wanted to, but a lot of times when I'm out and about or whatever, I like to have an iPad, okay? Or just a flat out phone. And really, if you kind of take a look at this, you can use an iPad, which is no thicker than a sheet of paper. You can download the Thinkorswim mobile app on it, or the phone. You don't have to be sitting at a computer. That's what's unbelievable about this, especially with something like an iPad. It doesn't have to be an iPad. It could be a tablet. You'd be amazed at just what the tablet can do, okay? Now, some people say, well, I have a real life. Well, some people kind of think of a real life in terms of managing their own investments, okay, or some of them, and trying to move those gains up and try to manage their own money, okay? And some people are saying, James, I'm retired, and that's what I do, okay? Everyone's a little different, okay? Now, what I want to do is also, let's go back to something just real quick. Let's take a look at a couple stocks, okay? So we talked about yesterday how a couple stocks had earnings. Mo had earnings, and you're going to see that it went down initially, came back, it beat the expectation. Obviously, someone sold. It's right slightly higher than where it was yesterday. The paper money account still has that position. Philip Morris, smoking, okay, still to the upside. The one thing we would say on Philip Morris is the price dropped down below the moving averages, okay? Now, the reason why I'm bringing this up is someone asked me the question, I believe it was on Friday, we talked about using the trend candlesticks. And someone said, well, what's the real goal of using those trend candlesticks? Let me explain just briefly. Now, what you're going to now notice is when I bring up PM, the red candlesticks are showing that the sellers are in control. So what the investor might say I'm going to try to do is they might say, James, I'm going to try to buy when the candlesticks are green, because that's a moment in time where there's momentum and could be a potential trend. And they're trying to hold on to the stock when the candles are green, hold on to the stock when the candles are green, hold on to the stock when the candles are green, hold on to the stock when the candles are green. And now you might be wondering, James, is it possible to blow on the chart and can I get a couple more green candlesticks? I've been a good boy or good girl so far this year. I'm not sure if that's going to matter, okay? If it works for you, let us know. It doesn't work for me. Now, if we take a look at this, what happened? Well, maybe that at that point in time, maybe it worked a little bit. But now what you're now going to notice is when those candles start to go, let's say, orange, which they haven't yet, but if those candles start to go orange, the investor might say, hey, I'm going to sell the position. I might consider covered calling the position. I might set stops. The reason why we like to use these trend color candlesticks is just mimicking what we see on the market watch. And if the investor is trying to maybe get the bullish trade directionally correct and try to ride a trend, the green colored candlesticks are showing at that point in time a bullish trend. The hard thing is you don't know how long that trend could go for, okay? Now, I want to go back to also Meta, which was also brought up regarding, okay, so let's kind of bring up just real quick a couple stocks in the communication space. So speaking of iPad, I'm just going to kind of use my iPad for just a moment, which by the way, your lists also go over to your iPad, and I'm just going to bring up a communication list. TTWO is up the most here today. And what you're going to notice is if I also look at Charter, now we don't talk about Charter that much, but Charter, I don't think we could probably say it's horrible. Charter is kind of showing a big kind of U pattern, and it's right near the prior highs as well. Now, also, if we kind of take a look at, let's say, Netflix, that has also been one of the horses, okay, that is trotting its way to the upside. Could that trend continue? We went long the position here, and we thought at that point it was high. That was 10% ago. That was $100 ago. We could have said malarkey, such as, it's at a high. It can't go any higher. And it went higher. The high is in your mind. The low is in your mind. The thing is, if it's at a low, it could go lower. If it's at a high, it could go higher. Okay? So we could be careful of that. This is trading psychology. Okay? It's what it is. It's not me. It's trading psychology. We kind of place limitations on charts based upon what's in our mind and what we think we're willing to do. Now, I'm going to go back to Meta for just a second. Let's kind of finish with this one. Now, if we look at Meta, what you're going to notice is, why are the colors of the candles not darker color green? Well, they're not darker color green because we really have what's called a trend 2. And what you're now going to notice is there's earnings. Now, we talked about implied volatility yesterday. Talk about how important that was, okay? If you didn't catch the class from yesterday, go back and listen to it. Now, what I'm going to do is I'm going to go back to the trade tab for just a moment. Now, what I'm also going to do in this case is I'm going to go down to the June expiration. Now, we know that if you look at the front week options, they're at 104, okay? If we go to, let's say, next week's up 70, 60, and if we go farther down, it's going to be 46. Now, what I'm going to do to try to get a little drop on that implied volatility is we're going to go to the 16 Mays. And what I'm going to do here is we're going to go look to sell the option. We're going to do a put spread, and we're going to do something out of the money. So remember, Delta is saying if the stock went up $1, how much would the options gain by? Okay. Or if the stock went down $1, how much would the options lose by? Okay. Now it's theoretical. We don't know what the bid-ask spread could be doing at that time. Is it narrowing? Is it widening based upon volatility and interest in that strike in general or the options? It's a theoretical profit loss. Okay, you have to kind of see how it plays out. Now, what I'm going to do is I'm going to right-click on this. And what I'm going to do is I'm going to right-click right on the 520. Why did you choose the 520? Choosing the 520 because that's where the open interest is, okay, compared to 77. We're going to right-click on the 520. Then what we're going to do is we're going to come back and just sell the 510. We're going to hold this over the earnings. In closing, the credit is going to be 287 and the max loss is going to be 713. Whenever you have a reward to risk like that, it lets us know that we're holding, that we actually have a probability-based trade, and there's the break-even expiration. Now, what I want you to do is I want you to practice using those trend candles. Second, I want you to continue to practice looking for positions that actually have higher than expected or higher than normal implied volatility, and practice using short put verticals and cash secured puts with downside protection, okay? So these are the things I wanted to cover here today and also review in the paid money portfolio. Now, we also have a class coming up next with Getting Started with Options. Stay tuned for that. Thank you, Barbara, for answering those questions in chat. And also a quick reminder that if you're not subscribed to the Trader Talks channel, okay, right on YouTube, it's the easiest thing to do. Just click subscribe, okay? And with that said, remember with what we discussed, it was done for example, illustrative purposes only. Remember that also, when we talked about investing, there's risk. Be aware of what that risk is and how are you trying to manage that risk. This has been the class on Investor Master Series. And thank you again so much. And stay tuned for our next webcast coming up next. Take care. Bye-bye.